Welcome to the weekly recap brought to you by themortgagereel.com for the week ending December 19th. Covered in snow here in Washington with huge announcements that came this week on Tuesday. The head of the Federal Reserve, Ben Bernanke, made the announcement that they would be heavily investing into mortgage-backed securities. With that brought some renewed confidence to the mortgage world, to financing. How does this translate to mortgages and you at home? When you hear mortgage-backed securities, as we mentioned on the headline on Tuesday, when you either purchase or refinance a house, your mortgage is pooled in with many other mortgages into these a pool of fund, then sold as a commodity onto the marketplace in Wall Street. That commodity is then titled a mortgage-backed security as the vehicle that the feds will be heavily investing in. So on Tuesday we saw the yields on mortgage-backed securities spike by about 100 to 120 basis points. What does that mean to interest rates? We saw interest rates back off down to the 4.5, 4.625 barrier that we've been wanting. Now these are levels that we saw in 2003, 5 years ago. So until now we have never seen these rates. The key importance of it is volatility. As you see and you become unfortunately kind of accustomed to with media and with Wall Street, there's these huge swings in Wall Street on the Dow Jones Industrial, 2, 3, 4, 600 points in one day. Next day, breaking back, breaking even, coming back halfway, and then going back down again. That pattern is definitely in the mortgage world. Mortgage-backed securities are trading just like that. So on Tuesday, we saw again the 100, 120 point swing. And then on Wednesday, by about 10:30 a.m., we saw interest rates starting to deteriorate, meaning going back up. Why? Because some of that money was being pulled back out of mortgage-backed securities. And when that happens, that means your interest rates go back up. So timing, we cannot reinforce this enough, is going to be key. This is not the time where you can sit back and say, I'm going to wait for that all-time low. We don't know when that all-time low is going to be, and below 5% is a historical low. Any homeowner that you've seen in the past 10 years, if you ask them, going back 15, 20 years ago when interest rates were tipping 18, 19%, and you tell them you can get 4.5 to 5% today, even 5.5, they would tell you, you better hurry up and grab it. Because in those days, they were paying 13 to 19% to buy a home. And that means your purchasing power was really pulled back. In today's marketplace, that would be extremely unaffordable. So these are times that you have to be ready to seize that right opportunity. What we want to direct you to is the Home Buyers Education 101 page to look at the break-even point. When does it make the most sense as far as savings to either buy that interest rate down if you're in the house for the long term and that's your goals, or if you're on the short term, you're coming off an adjustable rate mortgage, or you're thinking about moving, then obviously you're thinking about no closing costs. Both of those opportunities have definitely come back. And moving into 2009, we wanted to comment we recently received about the worries of inflation. We're in a time where unemployment is still on the rise. The gross domestic product is still proving we're in a recession. We still have consumer confidence at lows. Many indicators that just show we're not at that point where we're going to be able to go back into that inflationary period. Interest rates would have to start rising again. The Federal Reserve would have to start rising this interest rate that they just announced that they're going to be willing to cut to zero if they have to. They would have to start increasing the interest rate in order to show they're now fighting and going back into this inflationary period. With that, we don't really see that happening in 2009 because it's already been determined through 2009, 2010, we're going to be in a period of slow growth and recovery. So please pay attention to the fact that you have to know when the timing is right for you independently rather than the marketplace. When does it make the most sense, and seize that opportunity. In the first part of January, we're going to have many announcements coming from end of year, quarterly, fourth quarter earnings. We're going to have the retail sales report. We're going to have the consumer confidence report. We're going to have all the speculations of what actually Christmas was able to provide. How much money was spent. How much money did big corporations like Walmart either break even, gain, or lose. All of this is going to have ramifications on the entire face of the first quarter of 2009. The biggest piece, we have President-elect Barack Obama taking his official seat with his superpower panel that he's created, starting to bring out new legislation that shows they're going to be doing things to stabilize housing, to help the homeowners, to help current and future homeowners make that next step, to help transition through difficult times. many things happening, and this is all going to create this volatility on a daily basis that you have to be aware of. The key thing is making sure you're working with that right professional that understands the marketplace, that has the tools at their hands to empower you with the right education so that you can make a well-educated decision in making that next step, determining whether it's to buy, refinance, invest. No matter what the case is, they can provide that to you. If they cannot, we question, are they the right people to be working with? You can email any questions to us at info@themortgagereal.com or simply blog below. And we'd also like to ask for the opportunity to assist you with this process. In any event, whether you work with us or not, please stay tuned to what the information being provided, because we are committed to making a difference, especially here in our local marketplace, our community here in Washington. We want to make sure that you understand what impacts that you're hearing on a global and national level and how that translates to here us in Washington. Stay tuned. We'll be back next week, and we will definitely bring any headlines that news provides that breaks even new, either unknown territories, or if something's definitely impacting mortgages for the better or for the worst. Talk to you soon.